Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant, Smart Property Investment, recording a couple of days after the federal election, which we've been talking about for about the last year or so. If you think back to the latter part of last year, I was sort of indicating that potentially there might be an earlier election. There's a lot of scuttlebutt around at that point in time. The Labor government had pushed it out as far as they possibly can into May, and it looks as though they got the result that they want. It's an absolute bloodbath for the coalition, the Libs and the Nationals, and there's a lot of commentary coming out of it. It was a hard-fought election. I think the consensus is the Prime Minister, Anthony Albanese, Albo, campaigned a lot better than the Libs, but there's also some fundamental structural issues at the heart of the Liberal or coalition party at the moment. The Nationals seem to go okay, but the Libs per se, and a lot of thinking going on at the moment. As we're recording, there's still a couple of seats which are still out. We don't yet know whether or not the Greens leader is going to retain his seat at the time of recording. There's still a number of different seats which are contested, and they're getting down to the countings where it might just come down to a couple of votes. Either way, that's Labor versus the Greens on some of those counting. It's Labor versus Liberal on some of those other countings. So we're seeing how it's all going to fall, but the wrap-up is that it's a majority government for the period ahead. My sentiments are, and you only look at the results, it's just been a decision by the Australians for continuity, irrespective of the nuances of policies. I think everyone's sort of beyond the idea of swapping leaders all the time. And I think what Australia's voted for is that continuity, not the politics of aggression and nitpicking. I think they just want to get ahead with things. So we're going to pull this apart today. As you all know, I am a political neutral. I don't sit on either side or in connection with any particular liberal any party. But my colleague, the managing editor of real estate here at Momentum Media, by way of disclosure, probably leans a little bit more towards the coalition.
I can hear our listeners laughing at home, Phil. I can hear them laughing because you've been pretty on the record in inviting some former Greens lower house MPs onto the podcast for a debate. Yes. And may I say cowards, because they would prefer to lose the election than to come on to this podcast and debate you.
So, yes. And
Max Chandler.
He ain't got a job anymore. So if you're tuning into this, Max, I'm more than happy to have a chat with you, please. And you were very vocal during the election campaign. And a lot of people were chatting about Max being the guiding light of the Greens, and someone he had plenty of energy. But I tell you what, everyone also called him Albo's nemesis. I think Albo even had a little sort of crack at him once and said, "Mate, pull your head in."
Albo would just be like, "Who?"
Yeah. Well, that's what Trump said about Dutton.
About Dutton, that is true. But Albo, who? Max who?
Max who?
We had this in the lead up to it, and I think a lot of property investors, it is something that they're very, very keenly aware of. Those people who do push wide-scale tax reform, whether it's negative gearing or capital gains, you do need to watch out for it. But that politics of division coming from that particular grouping, which we expected, everyone was getting a little bit concerned with Gen Zs, millennials lining up behind it. No.
I think Australians have voted against the politics of division. I think largely Australians are fatigued by it. And I think Penny Wong only today came out using very similar language to that, having a crack at the Greens leader, the fact that it looks like he's going to lose his seat. Whether or not that transpires, again, it's time stamping when we're talking about this, but
it's wild because, in terms of the politics of division, I think, when a lot of the work came out around the CFMEU, and I thought the crime reporting done by I think that was Fairfax, and the agencies, crime enforcement agencies, were fantastic. Looking at how, you've got these union members that are just representatives of the bikies earning 250 plus K a year for a job that doesn't really exist. They're telling businesses what they can and can't do. They've basically got a CFMEU tax on a lot of construction and building businesses, which actually that does flow onto the supply issue. That does flow onto the cost of new stock coming online. Labor took a very middle of the road approach with it. Okay, we'll monitor it. We'll wait for the findings to come through. We're not just going to back them because they're the CFMEU. Just because they're a union, we're not going to throw our lot in behind you. But the Greens did. The Greens, for some reason, had this CFMEU crusade, and they were appearing at all the CFMEU protests. Phil, I don't want to speak for you, but I'm anti-bikie. You know,
I don't know how we got on the bikies.
You know, but that was the CFMU findings where they were in bed with the bikies.
And with the Greens, I don't want this to be a beat up of the Greens, but they might get one, if not.
I think it's looking like
one seat in the lower
Ryan
house,
in Brisbane,
in like that. They agree, like in a Brisbane being their heartland. I think that's where the housing spokesperson, the Greens housing spokesperson, was from. But yeah, they've really been hammered in the lower house. It looks like they'll get stronger representation in the Senate. I think they've got
change.
I think they've got about 10% of the primary vote, the Greens. But I think the issue with the Greens, and look, this is about property investment, and we're obviously speaking to, a cohort of engaged and connected property people, and we're not political commentators by any means, so we're looking at this through the lens of real estate. But the Greens really sort of shifted the gear into this sort of divisive, sort of conflict-orientated attitude towards their politics and the politics of popularism. And I think Penny Wong even spoke to this today, where the Greens used to be greenies, right? Tree huggers and sort of let's save the forest and stuff. And the climate, which most people go, like,
fine,
cool, but they really shifted their agenda to appeal to the to the rental class. Hence the reason why they were hyper aggressive with housing policy. And look, some people could say that the Greens have helped put housing policy more into the public debate and more into the national agenda. Maybe that's a reasonable argument, I would say. But some of the way in which they've done it over this campaign has really, hasn't resonated with a lot of people. No, and still you have this legacy of it. Whether or not one of the great outcomes of the election is that Labor won at such a significant majority that is really going to dilute the voice of the Greens and the Independents as a result. They can rule in a majority government. Well, and that's good, right? Like, it's a very clear message to the government now that they've had 3 years. The training wheels are off. You don't get a chance to make any mistakes. You've got the large backing of the Australian public to go out and govern. They're going to want results.
Absolutely.
So it's not going to be as forgiving in this second term. And my view would be, it's such a resounding success, it's going to be 2 terms. Like I think the Liberal coalition will struggle to be able to, unless something seismic happens that outside of the control of Australia, it's going to be hard to manoeuvre and shape policy settings to an extent where they can dissipate some of the strength of the Labor Party at the moment. So right now they're all scuttling for positions in cabinet.
They sure are.
And I think that's going to pose its own problems. And that said, that a lot of people would say that the ministers have had in the cabinet have largely done a reasonably good job. There's a lot of people who now have been voted in, and I think that the factions normally work out who gets what seat. Yeah. There's a fair bit of like argy-bargy. For those people who aren't too politically orientated, that means like there's groups within groups within groups in political parties, and some of them have more strength than others. And you always hear about, Labor or Liberal power brokers who there's people who pull a lot of strings behind the scenes who don't necessarily get voted in, right? So there's a lot of trading that goes on. So we'll see how that plays out. But here we are, mate.
I do agree. I think your analysis is correct with the Greens and the Teals having far less of a say than you would have in even in the last Parliament. With housing policy, it's going to be interesting because I'll start off with is it a 2-term government? And what I've learned is
we'll go to housing policy after.
We'll go to housing policy
with
the 2-term government. I'm wrong so often, and I think everyone's wrong.
Yeah.
We are all not. I'm not saying you, Phil, but I mean
in
the commentariat. In the commentariat, and there was that point. It was really only a month and a half ago where the coalition was like, "Oh my gosh, these guys are going to pull it through. They're going to do it."
Yeah.
And then suddenly within 6 weeks, you have a 7% swing against you. I don't know how much faith people do have in Labor versus how much annoyance there was with the coalition. I saw a lot of speaking to a lot of centre right people. Are like, oh my gosh, are we even campaigning? You know, was there even another campaign, or you know, saying, well, credit where credit's due. Labor seemed to care a bit more and have a bit more of a coherent campaign. One thing I would say is that, given that Labor won so resoundingly federally, and they had such resounding successes in state governments, and I mean, in particular, WA, where they still had 60-something% of the vote, and in Victoria, where they still have 60-something% vote, and the coalition is at abnormally low levels of representation across the board, that the higher you go, the harder you fall, because typically you can partition problems. And you could say, well, no, that's the state government's problem if the state government was held by your political opponents. And they really don't have anywhere to go. So if things do track in a certain direction, they can't. There's no longer blaming the previous government.
Yeah, and you know, you've been in and around politics for some time, and I know you've been out on polling day. You've done all that sort of stuff, and you know, acknowledgement where it's due. There's been a lot of people out there working bloody hard over the campaign for whatever, whoever they're supporting, doing hard work, and most of them volunteers. You know, they're dialed into the political fabric and they want to try and make a difference. You've done that. I've never done it. You know, I've worked in a polling booth.
You've done the AEC counting?
Yeah. I used to do it with my mum. It was a thing that we used to do.
It's quite fun.
Which is quite cool. But I've never polled. I've never been aligned to a political party. I've never any of that sort of stuff, right? So, you know, acknowledgement of all the people who have done the work. Now, there's people on Saturday who are, you know, overjoyed. More people don't get their candidate up on polling day. Most people don't, right?
That is
when
true.
you think about it, right?
Labor got, 32 or 33% of the primary vote.
Yeah.
So when you think about that,
it's crazy.
Like mathematically, 67% or whatever, you would say.
And that's assuming that there's one Labor candidate in every sort of electorate. Like most didn't get in.
That's very true.
Think about that for a moment. All the blood, sweat, and tears, people giving up their careers, and like, you know, I know a lot of politicians. You know, a lot of politicians, like, you know, irrespective, and we're chatting about the Greens, like, irrespective of the politics, like, by and large, they all really, really care, and they give up a lot. They give up a lot, not only to stand their candidacy, but also if they are successful, like, it's a hard job, federally, state, even at a local level. So,
for sure,
you know, it's a big deal. So there would have been a lot of disappointed people, and think of Peter Dutton. He's given 20-something years of his life to politics. You know, not only was he not successful in becoming the Prime Minister, he's also lost his seat. Like, you know, irrespective of your politics. Like, think about that for a moment. Yeah. Just in a heartbeat, everything's gone from, wow, tomorrow I might be Prime Minister, to I've got to get a job now.
Yeah, I don't think you'd have too much of a problem.
I know, but
any consolation though.
But think about that, right? Yeah. Like, and you know, you read the papers and stuff around it, and they said, like, you know, the what you saw on TV, you know, I think he was like a full on campaign for him. Right?
Of course,
like,
it would have been.
He's gone.
Of course, it would have been.
And gone at it.
He just performed less well.
Yeah, and you know, on the performance side, before we get into housing policy specifically, yeah, there's a lot of wash up and there's a lot of soul searching right now. In the Liberal Party, and the Nats are pretty sound. Like
the Nats,
you know, Barnaby, like it's pretty. You know, I saw Barnaby Joyce was on Sky on the panel.
Oh yeah,
he was just he knew he had in the bag. I think he had 60-something% of the primary vote.
Oh yeah,
so all the national seats largely.
But they were pretty stable. Yeah, I think it was only one or two seats.
Yeah, but the Liberals have been essentially chased out of the metropolitan areas.
They have been.
You know, and this is the point. You know, the Libs now have got to sit there and. You know, all the traditional voters, which are traditional Liberal areas, are mainly swung to the independents.
Yes, that's correct.
You know, and this is the way it is. And those Liberal votes that didn't take place, they went to Labor rather than, and this is what sort of scuppered the Greens out of it. So lots around it. You can go and read all about it and have fun with it. But you know, the Libs now need a new leader. They've got to work that out. They're still trying to decide.
And it makes it hard because it was one of those things where with a two-election strategy.
Yeah.
With a two-election strategy, which is what it was meant to be, you almost have this campaign as a nondescript kind of a lower key campaign where you get up and you win 3 or 4 seats and you just slowly shave that away. You get some fresh faces in Parliament. You get some good new young blood coming through, some good new spokespeople coming through.
Yeah.
But it was almost a case that when you sense that blood and when Labor realised, oh, they're nipping at our heels now, then it became a full-blown campaign. And now that 2 election strategy is right out the door.
Yeah. So let's see how it is. Well, they reckon Brendan Nelson was the greatest Prime Minister we never had.
Where did we get Brendan Nelson from in this conversation?
Well, because, you look at the Libs now doing a soul searching who's going to lead the party.
Yeah.
Well, he was in opposition for
I quite
years,
like Brendan Nelson.
right through the Gillard-Rudd.
Yes.
Gillard period. I think Abbott took. Abbott took.
It was Turnbull, then Abbott knifed Turnbull.
Was it?
Yes.
No, it was Abbott then Turnbull.
No, not in Prime Minister, in opposition leader. Brendan Nelson, Turnbull, Abbott.
That's right. And Abbott took the coalition to a victory over
in 2013.
Yeah. So Brendan was the leader of the opposition, and he did a really, really good job, but probably never to become Prime Minister. So I think all the Libs are sitting there now going, well, you might not want to be.
No,
you might not want to be the leader of the opposition because you're probably not going to be the leader that takes the coalition to the next. And so a couple of people I'm thinking specifically about are probably going, I don't want this at the moment. Like, I'll wait my time.
There could very well be some.
I'll wait my time, a bit of strategic patience. And I think a number of really good candidates, Libs who were MPs in opposition have lost their seats.
And that's a lot of very high performers are just no longer there.
They lost their seats, but I think the papers will tell you that the Labor won on better policies. A number of things really resonated.
I'd be inclined to agree, to be honest. I'd be inclined to agree because I was texting a few friends and we're having a bit of a laugh. And the idea is, you have 3 core campaign policies which you center everything around and you can bring it back to that. So, in a traditional campaign, what would it be for the coalition? It might be lower energy prices, stop the boats, and a gimmicky third one maybe.
Yeah.
But everyone knew in 2013, stop the boats. Like that was so hammered home that everyone knew what they were getting. It was written on the packaging.
Yeah.
I thought, oh, gosh, what were the 3 this time?
Nuclear. So it depends. What were the 3? What were the ones?
Or what were the ones that the media?
What are the ones that Labor picked up on and exploited?
Nuclear.
Number 1, nuclear. Number 2, work from home.
Work from home.
Not
work from home 24 hours before.
Yeah.
Or not back to the office, work from home as of the 24 hours before.
They just picked up on it and went, oh, well, if they want to send public servants home, they're going to make everyone back to work. They're going to make everyone back to work.
Yeah.
And I think also the timing of Trump tariffs probably didn't.
No, it didn't help.
Didn't
it
help.
It definitely didn't help. But this whole work from home thing, and look, I'm going on a bit of a rant here, but what a woeful crocodile tears of the laptop class. To be honest, I mean, you've got tradies out there that are waking up at 4 a.m., 3 a.m. every day, drive an hour to a work, so they don't get to work from home.
But this was the argument by the Liberal Party saying, well, tradies don't get to work from home.
Yeah, farmers don't get to work from home. Miners don't get to work from home.
Well, farmers largely
they work from
they work
their land.
At home.
They are at home,
not from home.
But they don't have the benefit of it's 10:30. I should probably log on. The boss might have emailed me. It's 11 o'clock.
Yeah. The sort of Trump-esque sort of positioning of the Libs and Dutton didn't help.
No, that did not help either. And we saw that in Canada as well, where you have their Liberal Party, so their kind of centre-left party, small L Liberal. They reversed their fortunes.
Yeah. So that was that's the wash-up.
That's the wash-up.
So we know what we know now, and housing policy was at the forefront of a lot of the policy positioning by all of the parties and where a lot of the argument sort of took place. And back to the Libs, I think they got hammered on the Chinese vote, as a result of being really firm on defence. And I think that, so pretty much every single one of their policies alienated someone.
Yeah.
And I think that has just eroded the popular vote. But both parties are the lowest they've ever been on the primary vote.
Yeah.
And you could argue now the independents really are political party in their own right.
Oh, the Teals. Yeah,
Some would argue that they're all funded by the same thing. They've got,
Oh.
there's an alignment. It's like the, on The Simpsons when they all sit around and all the political people and they try and work out
when they're in like when they're in Dracula's castle.
all that
the
sort of stuff.
Republican, the RNC.
RNC, anyway. But housing policy, let's get stuck into it. We'll just go to a quick break. Liam, stay with us, everyone. Back in a moment. Welcome back, Phil Tarrant from Smart Property Investment, chatting with Liam Garman, my go-to person for anything I need some political interpretation of as a political Luddite who just stumbles his way from one election to the next.
Oh, I've never been described in such cruel words.
I'm calling myself a Luddite.
Oh, you're the... Oh,
I'm the Luddite.
I'm okay with that.
Yeah. I'm saying I'm the Luddite. Okay. I turn to you. To help me out with these things as someone that sort of understands. So I still need to sit there and go, which the House of Reps, the big white one, and the Senate one's the little one, right?
Oh, yeah, I go with that. We'll go with that.
Is that how it works? That's
no,
the
it's
other way around. The white one is the Senate.
The white one's the Senate.
So can you just remind Australians, I've got to think back to did I do constitutional?
Your year 6?
I can't remember. Yeah. So the House of Reps is easy because you vote for the person in your little area who you want, and then that adds up, and whoever gets the most votes gets to be in the House of Representatives, which is the lower house, and the lower house is where all the ideas are debated and people come up with policies, and then it goes to the Senate, and the Senate needs to say
House of Review.
So yes, is a good idea. Does everyone put their hands up? And the majority says yes. Okay, that passes into law. How do people get into the Senate?
So the Senate...
so really simply, because a lot of our listeners probably still sit there going, I don't really know.
Yeah. So the Senate is elected on a proportional basis right across each state. So each state they elect 6 each term. Each territory elects 2.
Yeah.
And it is the 6 most popularly elected people get up into the Senate. You vote for the top 6 above the line. So you might be 1 Labor, 2 Greens, or 1 Liberal, 2 Libertarian, or whatever. Yeah. Or you do 12 below the line. And it follows your marked preferences.
Yeah.
In a similar way, if your number 1 gets knocked out and it doesn't have enough preferences, it goes on to number 2, number 3, number 4.
Yeah.
Now, the interesting thing was, and this was a Malcolm Turnbull era change, where that's where you used to be able to just vote 1.
Yes.
In the Senate.
You can't do that anymore.
You can't do that anymore because the parties behind the scenes would then organise their own preference flows.
Okay.
And there was that period there where between 2013, and obviously would have happened well before then, where you had a lot of really silly random parties being elected, like the Motoring Enthusiast Party.
Yes.
Because I not to knock motoring enthusiasts.
That's okay. They need to be represented.
They need to be represented, but perhaps motor enthusiasm isn't a top priority for most Australians. But because behind the scenes, each party could do their own 1, 2, 3, 4, 5, 6. If you did a good enough job stringing them together, you would get inevitably.
So there's someone jimmying up all the preferences.
Yeah, someone would manage to sneak through, and you'd have a very random person coming through on number 6.
So this is the reason why the Greens might only have 1 seat in the lower house. However, they're represented more in the upper house.
Yeah. I mean, if you're getting 10% of the vote, you're getting knocked off pretty early. And then that 10% will then flow into Labor. Yeah. More often than not, at about like 90% or something.
But the reason why like One Nation still gets seats in the Senate.
Exactly. So when
but not in the lower house.
Yeah, when you're at 10%, it's same with Greens. When you're at 10%, you're probably, once distribution of preferences occur, you might be in the top 6. If you hit 10%, actually, you probably will be.
But the Senate can't provide a prime minister. The Senate, you have senators.
Constitutionally, technically, you
can, but it's not.
Yeah, it don't really work that way.
Yeah,
I think the last time we had it was it the Duke of Wellington in the House of Lords?
Maybe, yeah.
I think so.
So senators can be ministers of a portfolio.
Absolutely. Yep.
But they sit in the Senate.
That's correct.
So, why would someone choose to be senator rather than an elected House of Representatives?
You might not be good at kissing babies.
Okay.
Yeah, you might not want to.
So you have all the talents to be able to be in a parliamentary system, but you're not really
and to be honest, if I'm going to take my gloves off, I think there are going to be some political hacks that don't mind which one they get.
Yeah, okay.
A winnable seat at the bottom or a winnable seat up top.
But you can't go for the Senate, the House of Reps, because you still need to be elected in that local area. But
yes.
often they will parachute people in. And
Christina Keneally tried
yeah,
it.
did you see what happened there? Was that Fowler?
Di Lee.
Yeah,
Di Lee,
God.
fantastic local representative.
Yeah, well, the Labor candidate,
Tooley. Yeah.
like got a lot of the vote, and
Yeah.
and they reckon that if they didn't parachute in Keneally,
Christina the first time round.
So like anyway, they're getting into
Di's
detail.
done a fantastic job.
Yeah.
She's a good local independent MP. So
I think 10-15% of the constituent in Fowler are Vietnamese.
They'd be
by background,
Vietnamese, yeah,
or
Cabramatta.
Chinese. But again, I think that Chinese vote's really Banks.
Banks with David Coleman, formerly.
Yeah.
But Banks, Banks was always, I think, one of those eyebrow-raising seats where a lot of people looked at Banks and year on year, election on election, it somehow kept returning coalition Liberal.
Yeah.
And then a lot of people are like, how? When you
It had a redistribution, I think. So redistribution, for those people that don't know, they move the borders around because there's supposed to be the same amount of people in a area to make it all even. But what's that got to do with housing policy? So
there we go.
Housing policy was at the front line of the discussion, and housing policy largely orientated towards first-time buyers.
Mm-hmm.
Now, the washout of all of this for property investors. Let's talk about that. So, number one, what would be on my radar is, in no order, Liam. So the housing policy was 5% deposits. We've got to see how it all is going to play out. 5% deposits for first-time buyers, uncapped on income, and the numbers still need to come down exactly, but you can buy up to about 1.5 million in Sydney, $1 million in Brizzy. So, well, whatever the sort of median-ish property is in those areas, 5% deposit. So it means it's all you need to put down. You get a 95% lend, and the government will stump up the LM. Well, they will back the LMI. And I still don't have details on this. I don't know. Does that mean there is no LMI? The government's just
That was my understanding.
So the government's just saying to the lender, if they default, we'll cover it.
Yeah. That's my understanding because, you can buy a house for 5% anyway.
I know, but I want to know what happens to all the LMI that used to go to LMI providers. That's going to. They're going to have to get offset by the government because it's just wrecked their business in some way. But anyway,
and that's
a bit of detail.
That's how I would read into it because you can buy a house at 5%. You can buy a house at 0% if you do it right.
Yeah, you pay, but you got to pay LMI, right? So
but you have to pay LMI. So the only difference in my interpretation in this policy, the only difference is you wouldn't have to pay LMI.
Yeah. So one thing there
I could be wrong, but then they're just restating something that you can already do.
You don't have to pay. You don't have to pay LMI. I just need to understand whether or not the government's going to pay the LMI for you, the government backs it, and the LMI guy gets sort of pushed out. So maybe good opportunity if you've got kids to do some family pledge stuff. That's the future housing fund. Is another big key thing, and then there's also this commitment to build 100,000 new homes for first-time buyers. Or affordable homes.
So you got the 1.2 million house with a housing accord, national housing accord.
Yeah.
Look, at the moment, we're already projected to be 500,000 short by 2029.
500,000?
492.
Okay.
I rounded up.
Yeah,
what's $8,000 when what's 8,000 when you're talking about 1.2 million?
Yeah.
So we're going to miss it likely by about 30%.
Yeah.
So, and we've already discussed this on a podcast. How do we hit that 1.2 if we're already so short? More tradies. It's $10,000 incentive for people to hire tradies.
Well, I think tradies, there's got to be some incentives for tradies.
There has
free
to be.
TAFE stuff and all that. And then, so that's largely the policy, right? So what does all this mean for property investors? What I would be thinking about now, how this might change my decision making. Only today I saw, and this is still when this debate around the influence of the Greens moving forward, right? But this idea of taxing superannuation, unrealised gains in superannuation over $3 million, not indexed. They reckon it's going to affect Australians, not most, like some. $3 million in your super funds at the moment in time is quite a lot. I can't remember the numbers. Maybe it's 100,000 people will affect or something. I can't remember exactly. The Greens are sort of pushing for $2 million. Oh, wow. And they're also pushing to ban borrowing of borrowing of money to buy property in your self-managed super fund. I can't see that
I didn't
happening.
even know that policy.
Yeah.
Wow.
I can't see that happening, but I think you need to be making your investment decisions on the basis that there may be changes to this idea of taxing unrealised gains in your super funds above $3 million. So if you're close to that, speak to your accountant. If you're not close to it, well, maybe there's still a bit of fat for you to keep building wealth through there. The issue is that the 20-year-olds today, a $3 million super balance in 40 or 50 years' time.
Not unlikely.
Not unlikely. It's going to be a lot of money. So there's a lot of criticisms around this. So that's one aspect that you need to be thinking about. I would say the government has been pretty adamant that it won't do anything with negative gearing and or the 50% discount on capital gains.
Yep.
So you should be able to proceed with a sense of confidence around that. The government doesn't want to mess with the housing.
No.
And people's wealth, right? Like,
No.
You know, they don't.
And they really haven't even given much of an indication of it. The only times where they've even potentially alluded to it, and it wasn't even a political thing. It was Treasury did this was 6 months ago, 7 months ago. Treasury did some analysis on what would the outcome be if you did reform negative gearing and capital gains. And the blowback, I think, publicly was sufficient enough that it only took Labor a couple of hours to say, no, this is Treasury independently does this modelling to provide accurate and up-to-date financial.
Well, that's why the Treasury, like Albo said no. The Treasury went, well, yeah, like, you know, they provide this information to me. Like,
which I think is very reasonable. You want to know what's going on in the economy. And if you're going to have a fair and efficient economy, efficient being a very important part there, you need to know all the levers you have at hand. So, but Labor ruled it out within hours.
Yeah. So do you reckon that people can proceed for the next 3 years on the basis there'll be no change in negative gearing? It sounds like it'd be a big promise to overturn.
I think it'd be a big promise to overturn. And to be honest, yes, while negative gearing is important, I think the capital growth that people are going to see over the next 3 years will be enough to warrant some shorter term pain. The maths is clear. The maths is really, really clear. We aren't building supply.
Yeah.
We aren't building supply. So we have two things going on. We have a pledge to increase supply, which we're about 30% behind anyway. And by the way, 1.2 million homes over the course of 5 years, given that we're increasing our population by about 700,000 every year, actually ain't that much. It actually isn't enough to drive up supply such that affordability improves for, say, young Australians or first home buyers. Yeah. So there's no real concrete mechanism to increase housing supply. What they do have concrete mechanisms for is increasing demand.
Yeah.
Increasing demand. So we now have it easier to buy a home with a 5% deposit. We now have reduced serviceability requirements, say, for HEX debt, where HEX isn't counted into your serviceability. You've got state governments now, even Queensland, this is now moving into the state government territory, but no less important. The Queensland state government has ruled out charging stamp duty for first home buyers. Now, a lot of state governments have done that in the past. There have been a lot of stamp duty offsets for first home buyers. However, it was usually capped at a certain level. So even if you were a first home buyer, but you were doing absurdly well and you bought a very expensive house, actually you would still end up paying some of it at least. What all of this is doing is just adding fuel to the demand fire. And I see no way here when we are increasing Australia's population so rapidly, when we do have access to more capital, when some of our major banks are predicting 1% to 2% interest rate cuts over the next 24 months. Yeah. Well, there you go. There's a huge amount of demand there. So while, even if there was changes to negative gearing, Phil, I think your overall capital gains over the next 3 years under these policies are going to be substantial.
Well, we'll chat about supply in a moment, but on the demand side, one of the policies, Labor government, they imposed a temporary ban on foreign purchase of established homes. That's from April to the 31st of March 2027. So that was a consistent policy with what the coalition put forward. The challenges you have, so a lot of these headline policy stuff has been around the demand side of things, right? and going back to this 5% deposit for first home buyers. So that means they're going to need a smaller deposit.
Mm-hmm.
And if you do the math, so and I've got my calculator here, and let's be really simple. We'll go top end, right? So say if it's $1.5 million, is the maximum value of a property you can buy under that 5%. Well, the government covering the LMI, right? By 5%,
It's $75,000.
it's $75,000,
Yeah.
right? So if you're a younger Australian and you've got yourself $30,000-$40,000 together already, like you could tap your parents on the shoulder, beg, borrow, and steal. You're going to get to your $75K deposit. You're still going to have to pay stamp duty, and there's breaks around that, but that makes getting into the property realistic.
Yes.
You know, for more than previously. So what is that going to do? If there's more people looking to buy houses, that's going to put more pressure on the demand side of things. More people, which is going to have an uplift on prices. So what the government needs to understand is by making things easier, that means more people are going to be doing it.
That's exactly what's going to happen.
And most first-home buyers are going to be buying typically what most property investors, if they're relatively new to property investing, will be buying. So there's going to be a real price squeeze at the lower end.
Yep.
So what you should do about that, maybe you should shape potentially your investment decision-making where you should be buying and when, right? I think this kicks in at the start of the year, the new 5% thing. Then we've got to wait until January for it. So that mechanically will put upwards pressure on prices.
Without a doubt. Without a doubt. I mean, you've got no new supply coming on, but now everyone has access to more capital.
Yeah.
And that's what it comes down to. You have access to more capital.
Access to more capital while simultaneously interest rates coming down, which will increase serviceability, which is going to either change the price point of people buying or when they're able to buy. And also as part of this, is the government's promise to take 20% off everyone's tax. And I think that happens pretty soon.
Yeah.
1st of July, maybe.
They've already done one round of 20% tax HEX refunds.
Is this it, or that's not another 20%? I think there's only one tranche of 20%, right?
I don't know.
I believe.
To search it because they've already done one round of it. Because
so pop quiz. How many Australians have HEX debts?
Do you actually have the answer to this?
Yeah.
How many? Whoa. How many do we have now? 27 million.
Yeah.
3 million.
Thereabouts.
Is it actually?
Well, I've got it at a state level.
Yeah.
So New South Wales 883,000.
Yeah.
Victoria 805, Queensland 607, WA 264, etc. Down. Who between them owe about let's call it nearly $75 billion.
Yep. That's a $15 billion liability. Well, $15 billion of income that you've wiped out, essentially.
Yeah. So taking 20% of that, so which works out to be about on average about $5,500 per HEX person. What's that? Call it sort of 13. So the bill would be about $14 billion.
Yeah.
$14 million, it's out the window.
That you'll never see again.
From the Treasury, gone. So it's $40 million in the budget that's going to go out to pay off people's HEX debts. And then on the other side, they talk about, the Future Housing Fund. What's that? It's not that much.
No.
So, and this is when you start scratching your head going, might be nice to actually wipe some of the HEX debt, which again, because if you've still got HEX debt, it changes your serviceability.
Absolutely, as it should.
Right? As it should do. You wipe all that, that means you're going to have even more Australians in the market earlier than what they would do. So 5% deposits, and you're accelerating by logically 20% people being HEX debt free.
I do get a little bit concerned about now. I think the Australian housing market is robust and it is sufficient enough, and our our serviceability requirements and our lending requirements have been sufficient and so strong for so long that I think it is a very safe market to move into. Though I do take a little bit of concern with the political playing with the serviceability requirements and the lending requirements, because what I look at, Phil, is if you've only been able to save up 5% of a deposit, being very perhaps blunt, you haven't really demonstrated that you're a very good saver.
Yeah.
Well, that's on the one hand, or maybe you're new into a job. Maybe you're new into a promotion and you're earning more money and you haven't had a long time to save up a lot. But really, if you've only actually saved up 5% of a house or of a mortgage rather, you haven't really demonstrated that you're capable of receiving money, holding onto money, delaying gratification. That's one part of it. The other part with the serviceability of the HECS, your mortgage is it's static, right? You know, you will pay $4,000 a month or $8,000 a month or $12,000 a month. That is what is owing of you if you borrow a certain amount at a certain interest rate. Now, if you end up forfeiting 10% of your income or whatever it might be to service your HECS debt, that's coming out of your back pocket at the end of the day. You still have to, even when you're forfeiting money for your HECS, you still end up having to pay your mortgage repayments. So we've meddled in here. There's a reason that we have serviceability requirements. It's to make sure that people have enough money left over at the end of the month that they're able to pay it back and they're able to service their mortgage, both for their well-being so they don't have to sell their home, but also for the well-being of the economy, that we don't have some economic catastrophe and suddenly everyone starts selling their houses overnight and we collapse our financial system. Yeah. But what we're seeing here is that people who have no demonstrated ability to save and who also will be forfeiting several hundred to thousands of dollars a month in their income to service their HECS debt, but because now it's not factored into repayments, you're getting a lot of people who probably shouldn't have mortgages now getting mortgages.
Yes. And out of all the policies I've heard, and look, you know, the Labor, the government policy versus Liberal, like they're all sort of geared towards saying they try and make things more affordable. And we've spoken about this before. I really take umbrage to this HECS, this 20%, paying off 20% of HECS debts, right? And looking at the numbers, the quick math is not. It's about $15 and a bit billion dollars, right? Like $15 and a bit billion dollars for people who have a HECS debt. Now, and let's not even go whether or not all those people with HECS debts actually graduated, because you'll find a lot of them dropped out.
That is
right?
true.
So it's just the money anyway that they're never going to get the benefits of. And whether or not they're getting utility of all that education anyway, right? We won't even take it there. But the policy around spending $10 billion, this $10 billion commitment to build 100,000 homes for first home buyers, right? Why should a handful of Australians get all the benefits of getting this deduction
and making it onto the list?
You know, at $15 billion. Why didn't they, if they put that $15 billion into this same basis, that's going to create 250,000 homes. That money deployed into this scheme would be 250,000 homes to fix to go into the supply. So on one side, you're messing with demand because you're going to have more people ready to buy homes earlier because you removed HECS debt and everything you've just spoken about. When you could have put another 150,000 homes into the system on the same amount of money.
Now, you and I
personally, I don't think that's very fair. Like, that to me, and on the politics of it all, they've bought those votes, right? But not all Australians are going to benefit from that. Only some. And I think that's a little bit unfair. I reckon they should have put that money, instead of giving it to HECS debts, into this fund to build more homes. That would have been smarter, because that would actually help on the supply side.
So,
yes,
you and I famously went viral on Instagram.
Oh, did we?
We did. We went viral on Instagram Reels, and it was a reel starting off with you saying, and maybe this is capturing our next reel, but you said, why don't we take this money from the HECS debt forgiveness and pay apprentices like a stipend, $10,000 a year while you're studying your apprenticeship, extra on top of what you'd be working at anyway. That'll be your $10,000 study bonus, which you'll get on top of your regular income anyway. Voila, two birds, one stone. You get people into the trades. We fix our skill shortage. They're building more homes. Homes become cheaper. So then we all win as a country.
Yeah.
The apprentices and people with HECS debts, we all win. So,
And it increases supply.
and it increases supply. So 333,000 apprentices in Australia
Yeah.
at $10,000 as a stipend
Yeah.
is $3 billion a year.
So
3.3
only
billion
$3 billion a year.
So we could fund this for 5 years.
Wow.
5 years we could fund this program.
With the HECS debt forgiveness.
Yeah. So you could say to a young 18-year-old kid who's what do I do? Well, here, you could be 18, you're going to good crust. You got your beer money, your pub money.
Yeah.
But by the way, the thing that's not going to sell you on it, but is really good, is that you're actually part of a nation-building exercise.
Yeah.
And by you doing this and hundreds of thousands of your colleagues doing this, actually you will be able to have a good little place in the future. That's not going to cost you an arm and a leg.
Sometimes I just shake my head and just go, that would actually help increase supply because you've got more tradies who can build houses. It would mean that you've got less kids going to university. Now, the universities will complain about that.
Oh, wow.
And a lot of people argue that university education in Australia should be free, right? That's some way behind us, right?
Yeah.
That's not ever going to happen again. I can't see it. But you're going to be attracting more people into the trades rather than university for the skills of the future, I don't know. My mind boggles on the HECS thing. What I think would be a better policy, and this would be my recommendation. I would be incentivizing. I would make it a tax deduction for parents. Right, any money spent paid to pay off an existing HECS debt to help kids into property early should be a tax deduction.
Yeah.
Make that tax deductible. You see what happens real quick to HECS debts. That's how, and I get the point that there's a lot of people saddled with these HECS debts, and therefore it's holding them back from doing other things in life. Okay, I get that. It means that you might not be able to afford a home or buy a home because you're paying off a HECS debt, therefore you can't raise a deposit and/or it affects your borrowing. I get that. You've got to get rid of the HECS debt. Incentivize parents through a tax deduction to cover it. And
Phil, I don't even.
Again, you're going to have a supply problem. But you think about this: people are going to get conditioned on the idea that HECS debts are going to get wiped out.
Yeah, I don't even know if I agree in terms of it's saddling them so much, because
that's what you'd be led to believe.
That's exactly it. That's it. I think it's I think it is a vote buying mechanism, because what it is if you fall under a certain amount of it's not like your jet ski repayments, Phil. It's not like your house. It's not your mortgage, where if you lose your job, you got to keep paying it. If you fall below a certain threshold, it's like $55K a year or something, you don't have to pay it.
It's gone up. It's now 60.
Oh, well, there we go.
I can't remember. Maybe I might get this wrong. It's increased by about 10 grand.
There you go.
67.
So it
could even be higher now.
It's not a case that the government's going to send debt collectors after you if you fall on hard times.
Yeah. But the big argument would be that, HECS debts have gone up so much because they're all being indexed to CPI, and therefore they've all been hit with interest.
So do mine.
Payments. Welcome to the real world.
Yeah, it's
if you take on debt, it's got interest connected with it.
Yeah.
But
So, that's where actually, as a society, we can't blame the 18-year-old kid that decided to do this. As a society, this is where we have those informed arguments to say, cool, you can either, and let's be honest, most uni students, they're there at the uni pub during happy hour, and they're not
drinking their $16 schooners.
Yeah, they're not going to lectures. They're not there.
No one goes to lectures anymore.
Yeah, they're not there in the library trying to. And for those 5% that do, congratulations to you and all power to you. But most aren't. We can have an informed conversation, so we can say to our 18-year-old young Australians that you can make a great crust doing this. You can make a great crust following the trades route.
I tell you what, there's a lot of tradies out there who are property investors.
Earlier,
like tradies get on the property ladder typically.
Well, because they know property intrinsically.
I know, but faster than uni students. And yeah, I don't want to be, but it's the last time I'm going to talk about this HEX thing. This
Oh, it's not. You're going to bring it up in the future.
15 odd, $16 billion bucks, right? Which to the point, $10 billion going to 100,000 homes. We're talking like that and a half more, right? Through the forgiveness that only some people get the benefit of. Those 3 million people directly, right?
Yeah.
Like it's not cool, and it's only going to fuel price growth, right?
And you know,
what's an F-35 worth?
Oh,
100 million bucks.
yeah, it would be in the hundreds. Yeah.
So back to you. So tangibly, you know, for
you get about 150 F-35s.
That's twice as many F-35s, more than twice.
For our listeners, the F-35 is our fighter plane.
It is.
And the really cool fighter plane that was once, it's so undetectable that it was once someone ejected from it and it kept going and the United States military couldn't even detect it. Couldn't find it.
So Australia has 70,
we have 72.
So you could have bought
150. You could buy 200%.
You know, and so that's that 200% increase of our main strike capabilities as a nation, which would have benefited every Australian.
Yeah.
Not just those with HEX debt. So this, I think this they got that one. They've got that one wrong. They're getting a lot right. The government, you know, but they got that one wrong. I don't.
Yeah, and you know what?
Feeling. But what about
it's really bittersweet. It's really bittersweet because you and I are very good on this podcast with balancing ethics and return. And we try and do both because on this podcast we acknowledge that we don't want young Australians to have to come up with $3 million for a home. You know, and that's why you and I feel harp on about increasing supply, making planning easier, opening up new land, getting people and giving them the opportunity to grow. Which is why we harp on that. And it's very bittersweet because I look at these policies and I look at them like the next 3 years under this Labor government, if you're a property investor, I think it's a good time.
Get stuck in.
Yeah.
I'd absolutely get that. So let's chat. We're going to go to another break. Stay with us, Liam. We'll get back and let's talk a bit about on the supply side rather than demand side.
We haven't got to supply yet, Phil. Gosh.
We'll see in a moment. Welcome back, Phil Tarrant, Smart Property Investment with the one and only Mr. Liam Garman, who you're hearing a lot more on and about on the Smart Property Investment Show and the Property Investment Podcast Network. Does some co-hosted podcasts. You're doing all that sort of stuff.
We've gone Instagram famous, Phil, on this podcast.
Oh, yeah, maybe. Yeah, cool. Like us. Are we more Insta? Are we Insta?
Well, we're becoming more Insta. We're becoming more Insta. We've been
like us on Insta.
Yeah, us on Insta and follow us on YouTube as well. Our YouTube's going off.
Yeah.
It's going really well.
Good. I see the other guys doing YouTube. Maybe we should do YouTube next door.
Yeah.
We'll do that. Better studio than this one. They put us in here, but so a lot of everything we've spoken about, and you know, pulling apart the federal election on the housing aspect of it all has been largely on the demand side. So you know, every action has a equal and opposite reaction times 10 in property. Yeah. There's third, fourth, fifth order effects of everything. That's why property is intrinsically connected with the Australian economy. And we had a debate on another podcast that we do, Contested Ground.
Oh, yeah.
I don't think
I wasn't on this one.
It was with our co-host on it,
Dr. Marcus Thompson.
Dr. Marcus Thompson. And for those of you, we co-host this podcast within Contested Ground. He was the inaugural head of information warfare for Australia. So the guy who was in charge of, you know, offensive and defensive cyber for Australia. And we had this debate where we talk. So what we talk about is sort of critical infrastructure and security, geopolitics, and everything which sort of, you know, makes Australia a great place to live, but all the effects of being in a global environment, our place in the world down here, some of the great power competition taking place. So we argued. I don't think I convinced him. He's a pretty smart guy, much smarter than I am. He's been around a bit. That I was debating the fact that, like fuel security, energy security, telecommunications security, financial security, so critical infrastructure. My argument was property is probably the critical infrastructure of most importance to Australia.
Mm-hmm.
So property being many ways the heartbeat of the Australian economy. Everything is either connected with property and or contingent to it. So
Stamp duty, the tax
so
receipts.
our ability to generate income as a nation is highly connected with property.
Yeah.
Like, absolutely. It's where most of the coffers flow. And again, it's where a lot of money gets spent and where a lot of the debate takes place, right?
For sure.
It's fundamentally where people, it's housing, right? It's where people live. And if people have a roof over their head, they're typically happier, healthier, less stressed, have more hope, work harder, all this sort of stuff, right? And that's why homelessness is a big issue, right? Like,
But also, let's be honest, Aussies are property mad.
They are property mad.
Property mad.
They love it because they want to make a buck out of it as well,
do,
right? So
yeah.
and everyone is highly incentivized around the integrity of the Australian economy. A third of all properties are rented, so they've got a property investor against it, and another third of all properties are have a mortgage against it, they're owner-occupied, and then the rest of it is owned. So most Australians retain their wealth inside of real estate, and I think as an asset class, it's 7-point-something trillion bucks now. And the argument went to the point of saying, the inherent value of our banking system is intrinsically connected with property. That being, most banks derive a big chunk of their upside of their P&L, their balance sheets, off mortgages. So they want to ensure the integrity of it. The government, the federal government, is now co-investing with Australians, by not only if it's backing 15% of a deposit under these new schemes, it's shared equity schemes with it. So the government's highly incentivised that property retains the thing. Most Australians are looking towards a comfortable retirement through a world-leading superannuation system. Those superannuation funds, retail and industry, largely hold a lot of their assets in and around property and or the infrastructure that supports the people living in those properties. New train lines and roads and all this sort of stuff. You don't want to mess with Australian superannuation funds. So, the inherent value of property in Australia sustains that. So everything is property orientated. I would say it is the fundamental critical infrastructure.
I'd be inclined to agree. So I had a quick Google as you were talking, Phil. $9.6 billion in stamp duty raised just from New South Wales. Over 6.5 from Victoria, basically 4 from Queensland, over $1 billion from SA, couple $100 million from Tasmania, et cetera, et cetera, et cetera. Annually. So we're
stamp duty.
So we're summing to about over 20 billion. In stamp duty annually. So this, I think, from an economics point of view and finance point of view, Phil, the way that we can look at it is stamp duty is probably the most effective excise tax. It raises so much money without overly hampering consumption. So that's the one hand. So our government coffers rely on it. But what about our financial services institutions? How much of their books, and you were talking about super before, but how much of their books is made up of long-term assets, including long-term repayments from mortgages? So then the health of our financial services institutions and their share price feeding into our superannuation as well. I would be inclined to agree with your hypothesis.
Mate, go to the bank and try and take or get all your money back in savings in one day. It's impossible because the money it's all paid for other people's mortgages.
It's true.
Like it's there, and this is the double-edged sword in that everyone is so wed to the health and integrity of real estate in Australia that if it were to falter, that the house of cards will come crumbling down.
For sure.
So hence the reason why we just went through a federal election. They don't want to mess with people's wealth too much, and that wealth and the inherent wealth that they retain inside of their property. Absolutely critical, fundamental, critical infrastructure for Australia. That said, we were talking about supply and demand. So demand, we're increasing demand. A lot of people would argue. So on the supply side, you've got to increase supply, but the balance is you don't want to increase, and this is the great irony, you don't want to increase supply too much so that it devalues the real estate that we have today.
To be honest, Phil, I don't even think that's possible. I don't even think it's possible.
You couldn't do it.
I don't think it could be done. So those statistics that we were giving before, 1.2 million for the National Housing Accord, we're 500 behind when you extrapolate that over 5 years. when we have 700,000, let's say it decreases to 500,000 people come to Australia every year, over the next 5 years, that's 2.5 mil. 800,000 new houses coming on board.
So you're saying don't even worry about being cynical about it. There's nothing nefarious,
Phil,
nothing to see here. Like we should be building as much as we possibly can because it won't.
It
won't.
We can build it as much as we want.
Pockets might be affected.
Pockets might, yeah. And you know what?
Oversupply. I haven't heard anyone talk about oversupply in real estate markets for a while.
Oversupply, has its place.
It gets caught up.
It has its place. If you would I buy a unit in Parramatta for an investment property? Yeah. No. You will see zero capital growth. Now, would you buy a unit in Parramatta given the oversupply for capital growth? No, not necessarily. Would it potentially make a good first home for a young Aussie? Yeah. Yeah. And because of oversupply, you're not going to get capital growth from it. It's not too expensive. Some of them are in the 500s.
But there is the point. People don't like property investment until they start buying property, and back to the point, right? Like you don't want to mess with people's property because it's a wealth factor, right? Why would you want to buy? Like most people that buy their first home, sit there and they think, "I've now got a place to live," but I also want it to go up in value.
Yes,
that they do because it's a property investment's been democratized a lot, and/or hey, that goes up in value. I get to sell it. I get to move and buy another house,
and move
tax
up,
free,
and move up,
blah,
move
blah,
up,
blah, blah, without any capital gains on it. So I would argue that most Australians expect their property to go up in value. So again, a lot of the government supply orientated. I know that the government's looking to do incentives around build to rent schemes and all this sort of stuff, right? That's fine. It's a different game. But if you're buying a property, right, the idea is that you'll be incentivized. I think some of the grants is that it's a new build property, right? New build properties often don't perform in the same ways in which traditional or established housing does, with the view of property investment. So, if we're comfortable as a nation saying property investors, first home buyers, we'll incentivize you to go and live in this stuff because you get breaks around it, but that stuff is going to be inferior from an investment point of view than what established property is that property investors are going to be buying. And that in many ways is going to be the reality of it because of the way in which the stimulus is directed.
Yeah,
We're okay with that. I wouldn't be telling my children to go and buy a new build property. Like I'd break down numbers and go, don't go and buy a new build property in a development of 400 other ones when there's going to be 10 other 400 property developments in that area over the coming 5 years. I go, don't do it. Yeah, yes, you might get into the market earlier, but fundamentally, you're probably going to compromise your ability to create long-term wealth because you're going to be stuck in a property for 10 years. That's not going to do anything. Sure. Yeah. I don't think there is the maturity of conversations around that. That's the obligation of property investing parents to support that. But this is the second, third, fourth, fifth. Yeah, fifth
it also comes down to just good urban planning.
Yeah.
But
they reckon we're stuffed in southwest Sydney around it all, like or even northwest, like one road in and out. It's just a log jam. Like once you're there, it's pretty cool. Got everything you need.
Yeah, once you're inside, just don't expect to leave.
Don't expect to leave.
Hotel California.
Yes.
Yeah.
So I think there's a lot to do on the supply side.
Yeah.
There was some good sort of ideas put out by both sides of government around it. I think the coalition was talking about the last 100 metres, the last kilometre, or I can't remember what it was.
There were some good ideas about like modularised homes and stuff.
Yeah, so I think there's a stimulus going into that.
Yeah, watch this space because obviously decreasing construction costs will be fantastic.
Well, 40% of 40+% of all new, and it's back to this sort of cynical view of it all, right? You don't want to get too much supply because it might affect housing prices, but 40+% of all new builds are like taxes.
Yeah.
Who benefits from the taxes? Well, the government, right? So
I'm glad you listened to my podcast with Tim McKibben. from REI NSW because he said
they get the number right. It's about
40%. Yeah,
40%.
40% of the price of a new build is taxes summed throughout the entirety of the process.
The government don't want to make that too much cheaper.
No. Well, there you go. There's the perverse incentive.
Yeah.
Which is exactly why you wouldn't mess with stamp duty.
There you go. Anyway, there's the wash up.
Don't sound too disappointed.
Is it going to be a good time to invest in property over?
I don't think there's been a better time to invest in property, Phil.
It's always a good time to invest in property.
Yeah, but
it's above our pay grade to say where. But do you know where? Sorry to point. Do you know where? Do you know where you should be investing in property?
Where?
Download the Fast 50.
Of course, the Fast 50 report.
Yes.
Get it. Download it.
Is it available? Is it out?
It's out. Get it. Fresh in your hands.
Wow. Where to put your money today for the best capital growth in 2026?
It's on the SPI website.
Smartpropertyinvestment.com.au.
Mm-hmm.
It's all there.
It's all there. Fast 50. It's in a tab up the top. So I'm sure everyone's pulled over their cars by now. You've pulled over. You're opening it up on your phone. Top right-hand corner, a little ribbon. Fast 50. Click that. Go to the latest report. Collated
Crazy
from
stuff.
Australia's best buyers agents and property experts. And I feel those include some chief economists from some very major real estate networks. So people that know what they're talking about.
Yes.
People that know what they're talking about. They've all come together. They provided their insights into the fastest growing suburbs for 2026. And then we get some very smart cookies that they do maths and science.
Oh, they do maths things, do
they?
they?
Do maths things, and then they weight it and they accumulate everyone's different responses. So we're not over-egging a viewpoint.
I don't want to talk ourselves up with it. It's a third year that we've done the Fast 50.
Third year.
And a shout out to our friends over at Pure Property who are our principal partner with it. And you'll hear a series of podcasts with myself and their CEO Paul Glossop coming up where we pull the report apart. But we're going to get into the market first for a couple of weeks, let it breathe, let people sort of get a feel for it. Then we're going to give some analysis and interpretation of it. But whenever we do a catch-up episode, we largely get it right.
Yeah.
We largely get it right. But there's some significant changes in this year's report. And one of them would be one state, and you can probably all imagine where it is, which has been pretty well represented. That hasn't been represented well in previous years.
Oh, interesting.
Yes. Where to put your money today for the best capital growth.
Well, they better download the report.
You better download it, smartpropertyinvestment.com.au. And please keep watching us on the Instagram. Like us, follow us.
Follow us.
Do lots of
Instagram,
things.
YouTube, get your latest property intelligence.
On the Facebook.
Probably.
Yeah.
I don't even know if I use the Facebook anymore.
I don't think anyone uses the Facebook. And I don't think anyone uses X anymore, do they?
I browse it when I want to torture myself a little bit.
Yeah. It's just a bit inflammatory, isn't
When
it?
I'm having a good day and I had to bring myself down.
You go to X.
It's
the X factor.
The X factor.
X anyway. So that's us muddling our way through a bit of an election sort of wrap up, through the lens of property, but sort of giving some interpretation of it all. We should know by the next time we get together exactly how it lands, how many seats Labor ends up with, what the 32nd Parliament, is it?
I wouldn't even know. 30 seconds.
30
seconds.
seconds.
About right.
I can't remember how it looks. And a shout out to our friends over in government. I saw Claire O'Neill on Insiders the other day. It'd be great to get her into this show.
She's been in this studio before.
She has been when she was Cyber Minister. Claire O'Neill, yourself, if you're tuning into this, no doubt this is where you get all your property information from to get inside the minds of property investors. A lot of pollies invest in property, by the way.
Oh, I know. I've seen some of the
Let's do that. Let's go now. Once Parliament is once the cabinet's all sorted out, let's actually go and do a thing on property investors who are politicians. Yeah, it'd be interesting and entertaining.
The top 10.
Top 10.
Well,
I know Dutton had a fair bit, but he sold.
Well, I'd be interested to see. If you put it in a trust, you'd probably have to disclose it, right?
I think so.
I
looked at Turnbull's disclosures once, and it was
pages after pages. 400-page PDF, probably.
You can see he probably did it himself, though. It had Turnbull all over it. It's all sort of
very meticulous.
Yeah, it was. But Claire O'Neill, come and have a chat with us. That'd be good. We're getting a lot of people tuning into this. Happy to give you some ideas and some policies you might like as well. What say you, Lee?
Yeah, well, we'll come in with our top 10 as well.
Yeah. Our top 10 policies to shape housing into the future. You're a Y. No,
I'm a
millennial.
I'm a millennial. Yeah,
that's after Y, isn't it?
It's after Y.
Yeah, and I'm X.
You're X. You're X. Yeah. Yeah. I
So
think
you represent one cohort, I represent the other
I
cohort.
don't know if I'm representative of millennials, Phil.
You don't think so?
I don't think so. No.
You're more boomer-esque.
Oh, no. I don't-
Boomer-esque in your... But what I would say
Yeah.
to all of those millennials and Ys that vote Labor, you get more conservative with age.
Oh, well, I'm sure there might be some millennials who listen to this podcast who voted Labor because they want their property prices to increase.
Yes.
I don't know. That's a controversial opinion.
Oh, but it's true.
Maybe it's true.
Mate, once you're a property investor, you know what? You probably go backwards.
Yeah. So
Hard to get in.
Yeah.
But you change your tune pretty quickly when you're in.
Yeah. That is true.
Yeah.
That is true.
But negative gearing safe. Hopefully that debate's behind us.
I think so.
Yeah.
Yeah.
Yeah. The thing is now what's going to happen at state level, and maybe we can pull that apart in the coming podcast. Obviously, a lot of changes around state-based legislation when it comes to rentals, no grounds evictions, all this sort of stuff. In New South Wales, and I don't think that's all over. There'll be some changes moving forward, so we'll get stuck into that. But Liam, thanks for your time.
No, thank you so much,
chat.
Phil.
Good chat, and shout out to the Irish Brigade. You know who you are, who tune into this on the way to work, giggling at myself and Liam about some of the sort of stupid views that we have. So shout out to you.
I was wondering why I
Start
started
investing in
getting
property
texts.
more. Some of you do, some of you don't. It's time. It's time.
It's time.
It's time. Who's there we go. Political
Paul Keating, wasn't it?
no,
It's time. Oh, is it Goff?
I think it's Goff.
Goff.
It's time to
Oh, that might be. Yeah. Yeah, it might be
Goff.
Goff.
Was it Goff?
Yeah.
I thought you knew these things.
Or Hawk. I don't know. It was
Was
before
it
I was
Hawk?
born.
What's an all? It's time. It's one of the great slogans.
Before I was born.
Yeah.
Yeah.
All right. smartpropertyinvestment.com.au. Please, reviews. We like them. It's how we can get ahead. Slowly. Get ahead. Wherever you're tuning into this, whether it's on Apple Podcasts or Spotify. Reviews, I'm told by our producers here, are important. I get in trouble for not asking for them. So please keep those reviews coming, because the more reviews we get, the more people tune into this, and hopefully more people are informed about property and make a better decision. So that's a favourite for me. If you can get that done, follow us on Instagram and the other places, Smart Property Investment. You'll track us down. See you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.